Everybody is making money from your money except you. Banks invest the money you deposit. Insurance companies invest the premium. Pension companies invest the money, and they understand it so well that they understand by the money that you're investing today, they're going to be able to pay you X amount of dollars for a specific amount of years based on the investments you made today. In this session, I'm going to show you how to invest in the stock market. I'm going to break down how the stock market works from a perspective that you can understand so that you can participate. Because once you understand how the stock market works, you're able to participate and generate wealth. So join me on this journey. So there are basically 11 different sectors. So we'll talk briefly about those. The S&P 500 is the most followed index in the world in a variety of sectors to provide you with a reliable measure of the U.S. economy. Since 1957, it has increased an average of 10 to 10.4% per year. Remember, that's an average, right? So you take into account trends that happen, different periods that drive prices up and down. It's a measurement tool that everyone uses. In fact, I challenge you to start researching it and learn about it from its performance. The next area that we want to talk about are types of stock. And this is going to be a very quick section because there's really not a lot of types, but we're going to talk about the two main types, common and preferred. Common stock provides you with voting rights and possibly dividends. Preferred stock generally provides you with a steady income, but you don't have any voting rights. Stocks have different classes based on the charter documents of the organization to the internal investors, but they may have less control of the company. So when a company goes bankrupt, those preferred share stockholders will get paid first. One of the most beneficial things that have come into stocks have been partial shares. And Robinhood is one of the primary companies. So what does that mean, partial shares? That means instead of having to purchase a stock for the full share price, let's take, for instance, Meta. Right now it's $715. Instead of having to buy one stock for $715, you can actually buy $20 worth of Meta shares. So if the price increases, you still are able to take some of those gains, but you don't have such a high entry point. I think this is incredible opportunity for the investment community because now all the different investments that you hear about that you may want to invest in, you're able to. It is a wonderful opportunity for anyone who is interested in investing in the stock market. Partial shares provide a way to get into the game without going broke. It's a wonderful, wonderful opportunity. The next part we're going to talk about are the type of orders. So when you're actually purchasing a stock, so you can purchase what's called a market order, and this is at the current price. So you see the stock prices changing all the time during the day. It goes up, down every second of the day. So when you place a market order, that's going to purchase that stock at the market price at that time. Understand that there's a gap between the order and the placement of that order through the app. It may show you that price for this stock was at 715, but maybe during the order process, it may have went up. So now the order price is 716, and that may occur as well. So just kind of be mindful of that when you do market orders. To prevent those type of things from occurring, you can do what's called a limit order. And this only execute at a specific price, your target price. There's also an order called stop order, and this sells before it reaches your limit price. So there's a variety of different types, mixes of these. There's a stop limit order, and it goes pretty deep with a lot of different types. But these are really good to know so that as you're placing the order, you know what type of order you want to place. Generally, you see people placing limit orders because they know that they want to get in at this price. They know the stock is fluctuating between that price, so they may buy at that price. So they put a limit order with the idea of purchasing at that price. Hopefully that is helpful in understanding the different order type. We're going to walk through the purchasing your second share of stock. Hopefully you used the link that I provided in the description and you were able to obtain a share or a partial share of stock from the sign up. If you did, thank you. I appreciate it. Someone mentions the idea of trade. That's actually the language that they use for buying or selling a specific stock. Is trading. I want you to identify a company that you would like to purchase, but I don't want you to buy it or anything. I want you to research it. I want you to just look at the stock, find the ticker, and look at how the prices have fluctuated over a 1 day period, a 1 week period, a 1 month period, a 1 year period, 5 year period, forever. Look at the different things that have happened and see, how the stock has fluctuated. I really want you to pay attention and understand the fluctuation periods that stocks have. All stocks go through periods of up and downs, and it's important to understand this. So I want you first, before you make any purchases, to actually research the company. How do we figure out which company we want to buy? You think about what you like. What do you like? Maybe you like different brands. Maybe you like different products. Maybe you like different cars. All those things are ways that you can purchase a company. Whatever it is, I would say first, before purchasing, just research the company and find out what you can learn about the company. The next section that we're going to talk about are investment strategies. And this is where we're going to talk through a bunch of different ways people buy stocks. The first is dollar cost averaging. This is where you invest the same amount over a specific period with the idea of hoping to catch the price regardless of the market swing. It smooths out volatility and helps build wealth over time. It's a consistency thing that helps. And the longer you're in it, you average down in your price. The next term is value investing. This is where you seek undervalued stocks that are trading less their intrinsic value. For instance, there may be a company who had a bad situation that happened. And even though it's a really good company, this bad situation is bringing their stock price down. So maybe you're the type of buyer, a value buyer, where you look for these type of scenarios to purchase companies because you know they're going to go back up. It just may be a matter of time. So you're focused on ensuring that the financials of the company, good company, and you're just looking for investments that are often undervalued. The next investment strategy is a buy and hold strategy. This is something that I entailed for a number of years. And if you're young in investing, I encourage you to buy and hold at least a few shares because by the time you decide to sell those, you never know what those prices of those shares would be. So this is a strategy where you purchase a share or purchase a number of shares regardless of any market fluctuation, and you hold on to them. You hold on to them for a long period of time and just sitting on them. You don't really look at them. You don't look and see if they're taking a loss, if they're winning. You're looking at, just keeping it and holding it. You believe in the company, and you want to hold it and let compound interest start to take effect. That's a great method for those who are younger, those who have particular companies that you like and want to focus on. That strategy allows you to get the company and endure and hopefully make some from the gains that it has over time. The next investment strategy is dividend investing. This is where you purchase companies that offer regular dividends. Oftentimes, companies that offer dividends, their stock price doesn't fluctuate too much, which is one of the reasons why they may offer dividends, to offer as a safe alternative. With those companies, they offer dividends, and that dividends is often reinvested into your stock. So as you invest and continue to invest, those companies pay you a little bit in dividends, what helps to generate income for those stocks. And this is ideal generally for retirees and people who are looking just to kind of like let their money grow. They don't want to They don't want to take a lot of risk. They want it to just grow. This is one method to allow that. The next strategy we're going to talk about is index investing. This is where you invest in an index fund. And believe it or not, a lot of investors just invest in index fund. I know so many people, all they do is invest in the S&P 500. They put a little bit this day, a little bit the next day, a little bit this day. And some people play options with S&P 500. But that is one way that you can ensure you have diversification across a number of industries is through index investing. You can pick the index that you want. There's index funds for generally everything. There's an AI index fund, there's a technology index funds for everything. By investing in an index fund, that allows you to diversify, but also allows you to lessen your risk by spreading that across multiple companies. The next investment strategy is an asset allocation strategy. And this is where you divide your investments into different asset classes. You may have stocks, you may have bonds, you may have cash, you may have gold, you may have mutual funds. This is really to balance the risk of your overall portfolio. The next investment strategy is momentum investing. And this is where you buy and trade stocks that may be falling based on momentum. Think of one big thing that happens, news. Sometimes the news may report this company is doing this or something happened. Then people may be in an opportune position to purchase those shares while the price is driving down, with the hopes that it returns at some point. Another opportunity for momentum investing is the holiday shop. We all know that holiday shopping is one of the biggest retail holidays of the year. If you can invest during those periods, there's a likelihood that those investments could increase in value. There's another investment strategy called defensive investing. And this is where you invest in investments that are less affected by economic downturn. For instance, healthcare. Despite the economy, healthcare, someone's always going to be dealing with healthcare issues. That one industry that can increase during times of instability. Day trading is another investment strategy that we'll talk about. And this is where you buy and sell in the same day. You may buy a whole bunch of shares of this stock and sell that same stock just from a small movement. But this is very difficult. It requires a large, significant cash in your portfolio, just because they don't want you to get in the habit of day trading based on the risk and losses. So they want you to have experience and ensure that you have the capital to cover any losses that could happen. So this is very, very advanced topic, but it is something that I want to mention just so you know and are aware. The next investment strategy is called sector investing. And this is where you buy based on a sector or position in the sector. Like I mentioned before, with the holidays coming, maybe you're looking at the things people buy when they have extra money. So that may be one way to purchase into the sector. In closing, every major company started small, right? They matured, so now that you can invest them. Just like the company, you have to start from somewhere. So use this information to start your investment journey. This is the way to generate limitless capital. Find a strategy and follow it. Remove the emotion. Remove the emotions and focus on your goal. Start small and scale. Find a company that you like. Watch it for a few weeks. Then you're comfortable, maybe consider purchasing it and see what happens. Watch it move. Start learning the numbers, seeing what those numbers mean on the screen, and see how things change. Once you get more comfortable, consider setting up a daily purchase through Robinhood. And this eliminates the hassle of having to purchase. You can purchase, $5 worth of this company each day, and it's done automatically. This allows you to invest without having to think about it if you know the companies that you like. Now you can make money using the stock market. I wish you the best. Please continue watching and let's build skills.